Barrel rolls is the reporter thrown into the secretive world of the Forex Super Model, where nothing is as it seems. Beware the techno-monk, and steer clear of Professor Code and his two assistants. Give the senior trader a wide berth, and don't expect any sense from the risk manager.
Good morning, I'm Professor Code and this is the Forex Super Model daily briefing for Monday, the 1st of the 2nd, 2021. The time is more or less exactly 0500 GMT in the morning, obviously in the UK. Asian session coming to a close, UK session, well, European session firing up, and our lunchtime is the North American session. I've written up some things to get us underway then. So Friday, which was the 29th of the 1st last month, was the last full trading day, and we had a negative unopposed driver in the yen at minus 173, so no backdoor flows, and primarily the opposing positive flows were going into the euro at plus 113, next into the dollar at plus 50, and the pound was staying fairly static at plus 10 as the positive rock. Excuse me. Now over last week, so these are last week's flows, so from Monday the 25th of the 1st to Friday the 29th, we've got a similar picture in that the yen is the negative unopposed driver at minus 316, so no backdoor flows again, and we've got the pound soaking up the bulk of the opposing positive flows from the weak yen at plus 217, next the dollar at plus 98, and the euro this time was the positive rock at plus 1. So let's just write up the intraday then, and then we can do some analysis. Intraday, so this is Monday today, the 1st of the 2nd, open to about 15 minutes ago. So what have we got? Let's have a look. We've got dollar euro, yen pound, plus 65 for the pound, plus 9 for the yen, minus 30 for the euro, and minus 44 for the dollar, on activity of plus or minus 74. So we've got a positive opposed driver in the pound, a positive rock in the yen, a negative mover in the euro, and a negative secondary driver in the dollar. Right, so what's going to knock all this around? Well, we've got a fair bit to get through, so let's start then. So today we've got China's manufacturing and non-manufacturing PMIs, which we've had early in the morning actually, and they managed to were soft, but they managed to stay above 50. So you can read what you like into that on the China data. Right, this week we've got the Thursday NFP. We've got NFP week this week, but we've got Thursday. We've got the pound rates decision, and then we've got the 9th. On the 9th, we've got the Australian rates decision and China's CPI, and on the 10th we've got the New Zealand rates decision, and the general principle of China's data. Obviously, we look at it quite carefully, but Sunday we had the trade balance. We're going to have the trade balance on the 7th, so on Sunday coming up. So China's trade balance is going to be quite critical, And the interesting thing about the China trade balance is that they operate a policy of internal circulation, which is basically equivalent of firms and businesses buying Chinese manufactured inputs and outputs. So it's like the Buy British campaign, if you like, but in China. So let's look at the analysis then and make some decisions. Friday we had the yen as the unopposed negative driver. Over the week we've had the yen as the unopposed negative driver. Now these are significant positions in modelling. If it's unopposed negative driver, it's either a floor or a continuous ramp up. If you looked at our weekly review and weekly data cycle videos, we talked a bit about that. And so far today, you can see that the yen has gone from being very, very soft to coming up to the positive rock. So that's one thing to bear in mind. What else? The pound was weak. Strong last month. Last week, it was the positive secondary driver. So the pound was strong, yen was weak, and now the pound is still clinging on. The pound's actually in the Asian session is the opposed positive driver at plus 65. So that's something to bear in mind as well. So let's just clear this and just going to grab something to wipe the board. Right. So I'll tell you what we're doing, and then we'll. Right. Well, we've added pound CAD trades to the short side. We're long euro pound. We're short pound dollar, and we're short pound yen. Now overall, we've been fighting the market pretty much all last week. We've got how many trades have we got? We've got one full trade in that. We've got 4 full trades in the euro pound, 2 trades in the pound dollar, and 1 in the dollar yen. So we've got 3, 7, 8, and we've got 2 accounts firing away. So we've got 16 trades. Well, 16 trades in the market, and we're currently about we're underwater about 500 plus points. Over the 16 trades is roughly about 30 points per 30 plus points a trade. Anyway, to give you an idea of where we are, this morning we added this short pound CAD trade on both accounts. Anyway, so let's look at this then. So what do we think is going to happen? Right, the yen is really showing signs it's at a floor. So we believe the yen is basically coming up from the floor, and that's, so we think the yen's going to appreciate. Now we've got the equity transmission, which has been completely distorted and messed up recently. So we've had a fall off in the equities, but no apparent improvement in the yen transmission. So this particular correlation is broken at the moment. So even if equities come up, that doesn't mean that the yen will go down further. So anyway, that's the core takeaway from this, is that we think the yen's going to appreciate. The pound, which we're reasonably short of now, we think is going to lose those opposing flows. So we think the yen's coming up, the pound's coming down. That leaves us with the dollar and the euro. Right, so the euro we think is going to be neutral to coming up, and the dollar we think is going to be fairly neutral generally, but potentially, depending on what pair you're looking at, so also possibly strengthening. So that's where we are. Oil looks like it's going to start climbing, so that wasn't the full reason why we went short pound CAD. If you look at the data cycle, you can see that the CAD has significantly improved in its data cycle, and the pound is in the pretense game, pretending that it's not doing as badly as it is. So that's where we are. Where you want be useful to look at shorting the pound CAD. We're long euro pound, short pound dollar, and short pound yen, and the flows are being very resistant, but we believe will come good. So I hope that was useful to you. See you tomorrow for the daily briefing. Thank you very much.